Hello and welcome to On the Record with me, Shereen Bhan. We're coming to you from the JP Morgan India Investor Summit, and it is my pleasure to welcome on the program ITC Sanjiv Puri. Sanjiv, always good to have you on the show. Thanks very much for joining us again.
Thank you, Shereen. It's always a pleasure to interact with you.
You know, let me start by asking you about the big India opportunity. We've just come away from the G20 summit where ITC was in a way responsible for ensuring that the guests go away with an India experience. So, you know, this is the moment that everyone believes is the moment for India. From an ITC perspective, what does that mean? Are we likely to see you increase your capex significantly from the average 3,500 annually that you have been doing?
Absolutely, it is indeed, as you very rightly put, India's moment for a confluence of factors. One, of course, the economy, the macros are doing well. I think there's been a lot of good policy interventions, not just policy interventions, but you can see it on the ground, whether it's a digital infrastructure or physical infrastructure and many more. So it's really worked out well, and it's wonderful that despite the difficult global situation, Indian economy is still growing. It's growing well despite, you know, exports being under severe pressure. So indeed, things are well placed as far as India is concerned. And as you know, in the New World Order, and given India's advantage of demography and the scale opportunity that India can provide, whether it's manufacturing or services, I think there's a lot of global interest to look at this as a hub, not only to deal with the growing, domestic consuming market, but also as a hub for, global exports. So it's a great opportunity for India, and certainly it's very positive for all the segments of ITC. Most of our segments are related to the, consumption in the economy. We are a very India-focused company, and we are very confident and optimistic. Last year, we commissioned 5 manufacturing facilities. Right now, 4 more are in the pipeline. When I say in the pipeline, it is not on paper. Work is actually happening on the ground. One, in fact, should be commissioned in the next, 12 months itself. And we are also scaling up our hotels footprint. In the last 16 months, we opened 18 hotels. So in all the segments, we see immense amount of opportunity. We are very optimistic, and we continue to invest.
Well, let's unpack this, and this is the first time that we are speaking to you after the hotel demerger announcement. So let's understand where things currently are on track as far as the movement of shares is concerned, as far as the hotel business is concerned, and what's the outlook from here? Because you will continue to hold about 40%. Why did you feel it necessary to do so, and what's the plan now as far as investing in the hotels business is concerned from here on?
So first of all, yes, as far as the process is concerned, it's just started. So, I mean, nothing to say that, nothing much to say, it has just started. It's about a 15 months journey, and we believe it's well on track because we are well prepared for it. As far as the restructuring is concerned, I think, this 40% issue has actually generated a lot of media interest, though our shareholders were fairly complimentary in the AGM, and I had also occasion to hear the same, compliments from certain institutional investors, because this has been very well thought out. So that fundamentally we must recognize that whatever we do must position the business in a much stronger wicket than in what it was before. And for that purpose, for the hotels business, first of all, to grow and thrive, and to actually benefit from the tailwinds that this sector has got, it's important that it continues to enjoy the trademarks, the corporate goodwill, and all the processes and the synergy from ITC. We have huge investments in digital, which is also available for hotels. So it's important that the hotels has access to this. Similarly, for the growth of our, say, for example, FMCG businesses, the foods business, I have often spoken about the power of synergy. It is also a way for us to create new growth opportunities. The cloud kitchen comes together because of hotels and the foods business, right? So we don't want to lose this value accretive opportunities when we reorganize ourselves, right? And what is happening after this is that as far as ITC is concerned, our return on our ROCE is improving by 2,000 basis points or thereabouts. Our ROIC is improving by nearly 1,000 basis points. So there is productivity or financial metrics of ITC also improve. Shareholders of ITC get a direct 60% benefit in the hotels business, and there is a determination of the price based on market mechanics. 40% is held indirectly through ITC.
Yeah.
The hotels business will attract the right kind of investors who are interested in that kind of business. So all in all, it's a win-win for everybody. I think 40% was required so that synergy is sustained and the operations of hotels are stabilized. It gives confidence to all the stakeholders of the hotels business, whether it's employees or other stakeholders who partner with us. And therefore, I think that 40% was definitely required.
Okay.
And as far as investment in hotels is concerned, yeah, we have a strategy which we have said is asset right. That's the course we will stay. It is different from asset light.
Yeah.
So it will be a balance between management contracts and our own properties. And this new company has a very strong balance sheet. It will be debt-free with marquee properties and a very strong balance sheet, good cash flows. And it will also, as we have said, be funded for its capex requirements for 2-3 years through liquid investments. So the capacity of this new entity to raise capital for the investments it wishes to do by way of, through its own resources or through debt is very strong. And of course, always the possibility is there to, raise through equity route also. Because it's a very strong balance sheet of this enterprise.
But, given the aspiration that you have for the hotels business as well as the growth opportunities that you foresee, what do you believe will be the capital requirement to fund those aspirations over the next 5 years? What kind of capital raising potentially could we be speaking of?
Well, I do not see the need immediately or I do not foresee any significant need for capital raising. I think the cash flows plus the liquid investments that will be provided for the 2-3 years of capital will be sufficient. Because remember that we have a very strong footprint already in most of the metros, right? And therefore the incremental investments that we will be will be in maybe tier 2 towns and so on and so forth, where the sizing is different. Sizing is different, right? So therefore, I don't see any major requirement. But if, for example, an opportunity which cannot be predicted, say an opportunity for a trophy property comes up,
right,
and it requires substantive investments, I'm saying the enterprise has the capacities.
Are you looking at any trophy properties today?
No, I don't know when it will come, what will come. I'm just saying, potentially you could you have to keep your eyes and ears open.
I would imagine. Speaking of keeping our ears and eyes open, we long anticipated this demerger, and eventually it's taken place much after we had expected it to take place, and I would imagine that COVID played a part in that. The question now is what next in terms of value unlocking? Is there anything on the anvil up for consideration? Is there anything a few years down the line that work has started to play? I mean, as far as the FMCG business is concerned, the agri business is concerned, is that potentially in the direction that you could be headed?
See, I've always maintained that value will be created based on business fundamentals, based on sustained growth and profitability of enterprises. And though it's not for me to really comment on, what happens in the market, I think the valuations are determined by market players.
Yeah.
But I think it's the role of enterprises to create the value. And in our case also, if you see it's fundamentally because of growth and profitability that it has had an influence on the valuations, and that's what we are focused on, right? And that's the fundamental things. The role of management is to make sure the businesses get more competitive, are equipped for partaking or actualizing all the opportunities, in a manner that's competitively superior. And in that context, we will also have to look at how we organize ourselves, whether together as a conglomerate or does something separate make sense. And based on the merits of the case, one will take a decision. Right now, nothing is, there's nothing that we have called out. Whenever there's something on the table, we very transparently call it out.
Of each of the sectors or each of the verticals that you are operating in today, given the growth potential as well as the ability to unlock value, where do you think it would make most sense to consider heading the hotels route?
Well, let's take that when it comes. When it comes and where the opportunity is, right? I think it's just right now it'll be a little speculative to think about it.
Okay.
It'll be a little speculative. One has to look at it in the context of the time when it is decided, right? As far as if you were to ask me this question in another way, that within the ITC portfolio, out of our newer businesses, leave aside the traditional businesses, where is the biggest opportunity to create value? Of course, it's on the consumer side.
Right.
That I would say, yes, it's the consumer side has got the maximum potential.
So speaking of future opportunities as well as growth potential, the last time that we spoke, you talked about an untapped opportunity in the export market, and you said that that is where you believe that you should be doing more. Given where things currently stand, where do you believe you've reached, and what is the road ahead on the export opportunity specifically?
So we are approaching the export opportunity in two ways. So one are, I would say, let's say the proximal markets, and one are the larger global markets. Now, as far as the global markets are concerned, we have been in the process of setting up our distribution infrastructure. It's there now in about 60 countries in varying degrees of maturity.
Okay.
And that's the process that is on. It has, of course, not gone with the speed that would ever wanted it to, because there have been some disruptions during the COVID period because of supply chain and the cost of transportation, etc. But nonetheless, that's behind us, and we are building up. I think we're making a decent amount of progress. In proximal markets, the way we are looking at it is it's a more intense market development, where we are even exploring the possibility of investments, stroke even if there is a possibility even of an acquisition.
Okay.
And in Nepal, where we already have a subsidiary, for example, we've already commenced manufacture of FMCG, certain categories, and over a period of time we will build it up. We're looking at other proximal markets also. So two different strategies, one for a larger global market and one for proximal market.
But as far as the agri-export side of the story is concerned, how much of a setback, or how much is the fact that we're seeing a lot of changes as far as policy is concerned, whether there are limits being announced, restrictions being announced, different commodities being impacted differently, how much of that is impacting or constraining your aspirations?
Yeah. So what I alluded to just now was more on the consumer side. Agri, of course, is big for us. It's very large export business for us. And in agri, really, I would put our portfolio into really three vectors. One is the commodity vector. Second is the value-added vector. And the third is what we are building is the new platform, which is a business model on its own. It's ITC Mars. So that's value added is where we are really accelerating, and that's where we want to really press the accelerator, and we are growing quite well there. Last year we commissioned a global spices facility. Very shortly now we will be commissioning a nicotine derivative plant of pharmaceutical grade. This is really high value exports. So that's the route we are going as far as agri is concerned. And value addition also manifests in terms of the type of crops we deal with. So medicinal and aromatic is another area which I've spoken in the past that we are building. So we have now got the farmers growing it already in 7,000 acres. Of course, this is a much smaller number than we want to scale it up to. We are now taking it up to the next level of value addition, extraction, then proprietary formulation. So it's a journey that we will go through.
So if I were to ask you to put a number down as far as this journey is concerned, say over the next 3 to 5 years, what would you like the revenue contribution from exports to be between agri as well as consumer?
Okay, before I come to that, let me answer your question in terms of the constraints. So as far as the commodity business is concerned, yes, there are constraints. There are constraints because there are restrictions right now. So that piece of the agri business will have very limited traction till such restrictions are on. And we realize why it is there. It's because of food security, which has far greater priority than, business opportunities. Business opportunities must only come later. First, food security is important. So we respect that. And rather, it's our role to work with the value chain, the farmers, and see how we can become more resilient and more crop can be produced. So that's on that part. Now, as far as number is concerned, we generally don't give guidance. So I'm not going to...
I'm not asking you about the next quarter or even the next few quarters. I'm saying the aspirational number.
For what?
For exports as a contribution to revenue.
Well, as far as contribution to revenue is concerned in agriculture, it is going to be significant. It is already significant, and it's going to be much more significant in the future. Of course, it may have a lesser share of the commodity business, a greater share of the value-added piece.
Okay, let's dial back down to the more immediate term now. We are approaching the festive season. We've also seen a fairly uncertain monsoon this year, where we've seen large parts of the country being inundated with floods, some parts of the country not seeing enough rain, and that has impacted food prices as well. Two questions on inflation, specifically as far as commodity inflation is concerned. What is the outlook? And two, what is the outlook in terms of demand at this point in time? Because it's a confusing picture. You talk to different companies and we're coming up with different points of view on where things stand. What is the ITC point of view on demand today?
Okay, as far as inflation is concerned, I think the worst is behind us. In fact, as we all know that India has managed it much better than the rest of the world. Pre-COVID, India would typically have a higher inflation than the other parts of the world. It's now a better situation that we are lower, but it's higher than what we would like it to be. But I think the worst is behind us. Inflation is coming down, though the cost of commodities remains much higher than what it was pre-COVID, but certainly inflation has come down. In the recent month, we did see some increase in inflation that was on account of certain commodities, the perishables, where there was escalation in the prices. But I think that is behind us again, and it will come down to what it was prior to that. So inflation is all signs are the worst is behind us. It will moderate, but I will just say that we are all living in a very uncertain world because of this extreme weather events. So one has to be very watchful. But today all the signals are that it will only moderate. And with moderation of inflation, there is bound to be, and it's already happening, price corrections in the markets. So volumes will pick up. It is not like a on and off button. It's not linear. It's not that the moment you correct prices, the next day the volumes pick up. It's a process that happens because, there is inventory in the pipeline and so on and so forth. So it takes time. So I do expect in the second half, volume will be better. As far as we are concerned in terms of the trajectory, I think you've seen in the last few quarters that we've held on the growth rates quite well in the upper quartile. Even I would say our volumes have been better than industry figures. I can't give you a number because there are so many categories for me to get into it, but generally have been better. And I think it's holding on. It's holding on well. And rural also, there are some certainly green shoots of pickup are there definitely.
So you are seeing green shoots as far as rural demand is concerned. You said that you are hopeful of a pickup in volumes in the second half, and especially as we approach the festive season. You've done well on margins. Is there room now on the back of all the measures that you've taken and in terms of being able to leverage your competitiveness to do even better on margins? What's the aspiration as far as margins are concerned?
Yeah, here I can give you an aspiration. Yeah, so because we have called it out here. So if we look back, from FY18 to 23, our margins in FMCG have expanded by 770 basis points. We had said that our aspiration is 100 basis points or so every year. And so far we have done better. And despite the fact that we had very severe inflation for some period of time. And going forward also, I think we are saying 80 or more like 100 basis points is what we would like to do year on year. Of course, I'm not saying it's going to be linear that way. It could be some years a little more, some years a little less, so that plus minus will happen. But on aggregate, if you look at a medium term, certainly around that 80 to 100 basis points, we should be able to do. And what is it that gives me the confidence? Because I think we've put the structural levers in place. And the structural levers, one, come from the portfolio, where we are premiumizing. And we are premiumizing what we have. And we are premiumizing by getting mega brands to address value-added adjacencies. We are premiumizing by democratizing premiumization. That requires some innovation in the supply chain, because small quantities you have to take to, Bharat is premiumizing. So how do you, the servicing Bharat is a challenge. So that's where the innovation is required. So that's on the portfolio bit. Then on the back end, we are leveraging digital to optimize everything, from how we buy to how we spend to how we deliver. So all of that is in place. I think our ICML story is starting to give us results. I think the huge headroom to go with economies of scale and scope, capacity utilization. We've also delayered operations very well in 2 units, that is in Kapurthala and Trichy, with integrated logistics. That model has got proven. Now we are going to roll it out. We are getting closer to the market because of the footprint of our manufacturing facilities. The investments we are making in our facilities, besides giving us the right quality, are also improving productivity. So all of these measures, and of course as we scale up, there is going to be a scale advantage. So I think we have levers in place for continued margin improvement in the short term and medium term. All the levers are well there, and they will unfold over a period of time. And as we go along, hopefully we will keep on adding more levers to it.
Well, speaking of adding more levers, I want to understand what now the strategy is likely to be as far as the D2C space is concerned, because you have dabbled in that, whether it's Mother Sparsh or yoga, bar, and so on and so forth. Are you willing to take a bigger bite of that market, of that business?
So, we don't look at it as just merely an investment or an acquisition of D2C. What we invest behind is the idea and the consumer space. So Yoga Bar was a premium healthcare space, natural ingredient. That is the trend for the future. It's a trend that is accelerating. So we've invested because of the trend.
Yeah.
Ultimately, I don't think anything big is going to be created purely on a D2C model. It has to go omni-channel. There will be very, very few and far little niches that will remain purely as D2C. You see, e-commerce is growing, but it's still a small pie of the consumer.
Right.
And our idea would be to be present well on every platform from where the consumer buys. Right, so that's where D2C has a role to play.
Yeah.
But the investment is driven by more the theme and the idea and the opportunity that gives.
Right.
So, and that's the value we bring onto the table,
exactly,
is to be able to make it omni-channel in future.
So what is the war chest, if there is one, potentially that you're looking at, to be able to take some of these ideas and these trends and build them out and amplify them?
Well, we have been resourcing all our investments in the past, all the brands that we have built. We've built 25 mega brands at 29,000 crores consumer spend. So we have the resources. I mean, resources is not an issue.
It's not a constraint, yes.
It's not a constraint. I think if at all the constraint is how creative and how well we can execute and how well we can prioritize. I think these are the areas really.
So speaking of prioritization, what is the prioritization going to be now as far as capital allocation is concerned?
So it's going to be, it's going to be more FMCG, and it's going to be more paper boards. Of course, agri is also going to get some bit of it because we are moving into value added. And then generally across businesses, you also have a capex for technology upgradation, replacement. So all of that will come in. So it's going to be FMCG, paper, the major chunk, followed by agri and our traditional business.
So on FMCG, a big milestone of 5,000 crores that you touched. Is that likely to be the sustainable rate? How much more do you believe you can improve on that?
I think the headroom to grow is tremendous. 5,000 is just, I would say, one milestone. And now we have to start working on the next milestone.
Which is what?
Could be, milestones will be in in thousands, in 2,500, in 5,000. So
is seven the next?
I'm not going to give any guidance, but I'm just saying that idea is to, there's plenty of headroom to go. You know, if you look at with our per capita incomes, you know, they're going to go up and double by 2030. And we have seen the S curve play out in many other economies. And I see no reason why it will not play out in India. And therefore, the opportunity is huge. And we have also, you know, been selecting our portfolio in a fashion where the opportunity to grow through penetration is huge. Our addressable market in our existing portfolio itself is, as analysts estimate, is about 5 lakh crores, the highest in the FMCG space. So headroom to grow is tremendous. And that's why, as I said earlier, it's all about insight, prioritization, and then great execution. So at a portfolio level also, there are 3 parts of our portfolio. The third part is really, you know, really creating the growth drivers for the future. So we are really building the portfolio for today, tomorrow, and day after.
So speaking about the growth engines for the future, outside of the businesses that you're already in or the categories that you're already in, what are you prioritizing from a future perspective?
Well, as I said, you know,
any new adjacencies that you're likely to get into, any new trends that you're hoping to zero in on?
So one vector is, besides scaling up our big brands, one vector is value-added adjacencies out of existing brands. And that's an ongoing process. It's about inciting and then finding the prioritizing to execute. So if you look at Ashirwad in the last 12 to 18 months itself, we have gone into, it's become a big center of plate brand. Besan, vermicelli, and so on and so forth, right? It's gone into many, it was already there in salt and spices and ghee earlier, so it's gone into frozen bread, right? Sunfeast has gone into milkshakes. Right, so the adjacencies will be spotted, and where we have the right to win, we will get there. We are then scaling up categories like the frozen snacks, ITC Master Chefs. We are scaling up our beverages, the juices. We are scaling up our, natural floor cleaner like Nimail. At the same time, we are incubating categories like Dermafique. This is our skincare brand. We are incubating chocolates. So these will, at some point of time, after we have scaled up what we are scaling up now, or get to some reasonable size, and when we find we have the right, opportunity, we will start scaling up these other categories. So it's going to be an ongoing process.
Let me end then by asking you talked about the premiumization of Bharat. As far as the premiumization of Bharat is concerned, what's the big opportunity that you intend to focus on? If you can just lay out the broad landscape for us.
So we are going to focus a lot on FMCG. And in FMCG, the focus is actually we find the opportunity across, whether it's food, whether it's personal care, whether it's stationery, or whether it's agarbatti, right across. So we will be identifying and the right assortment for the right geography, and promote those on those geographies. That's the way we will go about it. I mean, if you look at Chocofills, which is in the by far the market leader as far as a filled cookie is concerned. The penetration of that is just 3-4%. So if you look at natural floor cleaners, the penetration again is very small. So the opportunity is huge. So we have to prioritize the markets and the product and the markets and go and promote it and execute it there.
So how confident do you feel as we approach almost the end of this calendar year and we're heading towards the close of this financial year? How confident do you feel today about demand and about demand visibility?
I'm quite optimistic. I'm quite optimistic that demand will strengthen going forward. There will be in between, like anywhere else, there will be cycles, there will be ups and downs. But I think the medium-term, long-term story is very, very strong. Whatever is India-centric is very strong. Whatever is indexed to external demand, yes, there are challenges. So in certain B2B areas, which are indexed to external demand, particularly, for example, where China is a big player, yes, there will be challenges. But Indian consumption story, I think, is very strong, and it will only strengthen.
And it will only strengthen. Sanjiv Puri, always a pleasure. Appreciate you joining us here on CNBC-TV18. Thanks very much for your time, and we wish you the very best of luck.
Thank you, Shereen. Always a pleasure.
Always a pleasure speaking with you. Well, that's it then on this edition of On the Record from all of us here from the JP Morgan India Investment Summit. Thanks very much for watching. We'll see you after this very short break.